I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. There's a commodity most investors don't think about, suddenly back in focus: helium. And it all comes down to one event. Recent attacks in Qatar have taken a major chunk of global supply offline, disrupting roughly 30% of the world's helium production almost overnight. That matters more than you might think. Qatar alone accounts for about 1/3 of global helium supply, and early estimates suggest long-term capacity could be reduced by 15% for years. Helium is not just party balloons. It is critical for semiconductors, AI infrastructure, MRI machines, and aerospace systems. And here's the catch. There is no real spot market for helium. Prices are set through private contracts. So when supply gets hit, the impact shows up quietly and then all at once. We are starting to see that now. Short-term prices are doubling, and the market has flipped from oversupply to shortage overnight. And this is not a quick fix. Some estimates suggest it could take up to 5 years to fully restore capacity. That is why attention is shifting to North America, and markets are already reacting. One example is Altura Energy, which has been coming out to CEM events since 2023. Altura produces helium grades up to 8%, which is significantly higher than typical deposits. Since the Qatar disruption, Altura stock has surged more than 80% in a single week, as investors look for exposure to secure non-geopolitical supply. That is the bigger shift. A quiet, overlooked commodity is suddenly becoming strategic. So while helium has flown under the radar for years, that may be changing. Is helium becoming the next critical commodity story, or is it just a short-term shock? If markets feel all over the place right now, you're not imagining it. Q1 felt chaotic, and the numbers back it up. Investors have been hit with whiplash. War in Iran, a surge in oil, bond markets selling off, and nearly $10 trillion wiped from global equities. Oil has been the biggest driver. Brent crude is up almost 90% this quarter, its largest Q1 move on record. Gas prices in Europe have nearly doubled, and interest rates have flipped higher, not lower. That combination is toxic for markets. Higher energy costs push inflation up. That forces central banks to rethink rate cuts, and rising rates hit equities, especially tech and growth names. Even traditional safe havens have struggled. Gold sold off sharply in March. Bonds have taken losses, and currencies like the yen and Swiss franc have not provided much protection. At the same time, volatility is everywhere. Emerging markets rallied, then reversed. Crypto is still down on the year, and even private credit is starting to show signs of stress. The big theme is uncertainty. Geopolitics is driving markets. Not earnings, not fundamentals, headlines. And that makes this environment much harder to navigate. Are we entering a new market regime driven by geopolitics and inflation? Or is this just a chaotic start to the year? Air Canada is back in the headlines, and not for the right reasons. CEO Michael Rousseau is stepping down following backlash over his response to the recent LaGuardia crash. But the controversy has taken a turn. In the aftermath of a devastating incident, the focus has shifted away from the crash itself and toward the language used at a press conference. Rousseau spoke only briefly in French, reigniting criticism that has followed him since 2021, when he acknowledged living in Montreal for years without learning the language. In Canada, that matters. French is the first language for roughly 20 to 30% of the population. And for a national airline, especially one based in Montreal, expectations are higher. But the scale of the reaction raises a bigger question. Air Canada is not responsible for the crash. And at a moment like this, the priority should be clarity, accuracy, and addressing a tragic event. Instead, the conversation has been overtaken by a debate about language, to the point of leadership consequences. Critics say the issue is not just language, it's leadership. But others are asking whether this response has drifted far out of proportion, and why the focus has shifted so far from what actually matters. The 2026 Scottsdale Capital event is just 1 week away. Follow Investor Breakout to get the advanced attendee lineup, plus our top 5 picks direct from the Investor Breakout Exchange. And I'm Ryan Iverson, and I'll see you next week.